Hello, hello. Mic test, mic test. So looks like the audio is working fine at my end. So guys, this will be our 24th webinar in the series of the Trading Opportunities webinars. My name is Nirav, and before we go any further and start off, if you guys who are online can hear me just fine and see the screen, I would appreciate if you can confirm that in the comment section while I just complete the other stuff, load up disclaimer and everything. Hey Clever, hi Norm Furland. Sorry about the delays, guy. I was actually having food, so busy day. Sorry about that. So it looks like everything is working fine. So in that case, let me just go ahead and start this webinar with the legalities first. Good evening, Madhaji. Russ, good morning, Russ, to you. JPY and so our discussions will go from Euro USD to EURCAD, USDJPY, EURJPY followed by crude oil, gold, SPX, Nifty, and in the end we will discuss BTC. Now before I go with my introduction and anything, let's just go ahead with the legalities. So here's the disclaimer on screen suggesting all content presented here purely for educational purposes. I'm not soliciting any buy or sell. If you do want to use the views presented here for your trading, investing, or for any other purpose, you yourself will be liable for your profit, your loss of profit, or any other situation that might arise from you making any use of this information in any way. You can read the rest of the stuff over here. I believe that's enough for our legal coverage. Now let me just quickly go ahead and give you a quick introduction. So here is my website, guys. As you guys already know, my name is Nirav Yadav. I'm the admin and owner of 50 Eyes Market Analysis, which is a YouTube channel where this webinar is being broadcasted live. This is, by the way, 24th webinar in the series of trading opportunities webinar that I have been conducting. We conduct 3 webinars per week, and they are conducted on Monday, Wednesday, and Friday. The time for them is 2 PM GMT, right? So this webinar is also broadcasted on TradingView, by the way. Furthermore, about my works, I'm also the author of the book Think with the Markets, Secrets to Achieve 80% plus accuracy using Elliott Wave. That is available on Amazon's Kindle platform for instant access. Going further with my work, the most important thing or the most highlighted feature I would like to show you. This is, by the way, my website 50eyes.com, and I'm currently showing you the forecast accuracy page, which is a page having compilation of all my forecasts which I have made over the years. So I have been in this industry for many years. Since 2016, I have started putting out videos as YouTube videos or live webinars. Later on, they became live webinars. At first, I just started putting out videos. So in 2016, whatever instruments I discussed and whatever I said that will happen in the market, 83.34% of that worked out. In 2017, 87.5%. In 2018, 84.6. 2019, 84.88. 2020, 88.52. And by the way, you can just scroll and check the date what are the instruments discussed, crude oil, S&P Nifty, Reliance, what was said about the instrument, and check it for yourselves in the video. So in this way, these reports are compiled. 2021 is 82.22. I have not compiled for 2022 yet. It takes a lot of time, so I have just avoided it for now. And I'm just showing it to you guys because this is 6 years consecutive track record of 80% plus. And in this industry, if you are into trading at all, you know that even accuracy 60% plus is highly hard to maintain. So this is an exceptional track record. Just shows my level of expertise in my particular field. And the methodology I use is advanced Elliott Wave, which is considered the most advanced form of price action. So that was for the quick introduction about my work. If you guys are interested in learning more about my work, I have, as I already mentioned, my book, Think with the Markets, available on Amazon, and my video course. And if you are interested in personal classes, then you need to have completed my video course, and you can send the inquiries using the training program LT page. As a matter of fact, we are planning a new batch in the end of this month or the end of January 2023. So that was about it. Let's now head over to the webinar. As I mentioned a little bit earlier also, that in this webinar we will be covering Euro USD followed by EURCAD, USDJPY. You can check that here, by the way. This is the last webinar's record. So USDJPY followed by EURJPY, crude oil, gold, S&P, and Nifty followed by BTC. If anybody can give me one final confirmation that everything is fine, the audio is clear, and the screen is also working, then we can just get ahead with our webinar here. Thank you, Clever, for the confirmation there. So here we have on screen the chart of Euro USD, and you can see that it is sort of doing exactly what we were discussing the last time. So just to reiterate, if you guys were not present in the last webinar, I'll just quickly show what our count is. Thus far on this counter, our view has been that, by the way, this is the alternate updated count I'm discussing here. So from this point of reference, which is at the price level around 0.95351, we made an updated analysis, I think 2 webinars ago or 3, right? And the update was that we were taking it now as an impulsive progression in the upward direction. And by an impulsive progression in the upward direction, if you are not familiar with Elliott Wave, just bear with me and I'll clarify what I'm talking about. So in Elliott Wave terminologies, an upside impulse should look something like this. The first leg which goes up is called a wave 1. The one which goes down is called 2. Next leg which goes up is called the 3, followed by the 4 down. And the last leg which goes up is called the 5th. So if you look at the price chart, we realize that this is our 1, this is our 2. Furthermore, this is our 3. 4 is complete over here. And this is the 5th in progression. So pretty much the same picture which we discussed last time, because last time when we discussed it was already near this. Actually, I'll just check the date and we can exactly check where it was. So the last time was on 9th January 2023 when we were doing the webinar. And the market was roughly over here. I can be more precise, it was somewhere in this bar because we are using 1 hour bars, so it's not going to be that precise, but let me check. Yep, somewhere here. Okay, so getting back to the actual price data right now, just put the counts back. So we were discussing it last time when it was somewhere here, and the idea was that it was in wave 5, so it will continue going higher. So then what we discussed was the possible targets for wave 5, right? So the minimum target is already achieved, so it was not much higher than our point of discussion, so it was sort of irrelevant. The upcoming targets are much higher, that is at the level of 1.095 roughly speaking, or 0.9467. So in that sense, this is still continuing as the fifth wave. There are a few more things we can do at this point in time because it looks like the count is working out. We can build upon our analysis and we can draw trend lines. So this is the 2-4 trend line and the parallel is projected from the third. So basically what this helps us to do is it, in case of extremely bullish movement, sorry, it will allow us to determine the targets, and the targets are determined as in the upside of this channel is taken as a target. So in case the market is going to go straight up or shoot up, then the minimum target to the upside would be around 1.10755. So again, the targets are coming out extremely bullish, extremely bullish, right? And our target minimum is already achieved. So it is only helpful in case the market continues the bullish trend, right? So Euro USD, the stance currently on, or the current update would be that if you were long, continue holding longs with the trails as per your entry, right? And basically that's the update here, right? Don't have much to add on this counter. And yeah, by the way, guys, if you are not following these webinars regularly, there's one point I'd like to mention that when this market was over here, we did discuss the possibility of it heading straight up or going to either this second target level and then going up. So this swing long perspective was already discussed, and if you were following me, then you would have been able to take at least part longs or partial long positions before this upside, because these were discussed in quite detail. So anyways, that's my take on Euro USD. Let me know, guys, if you are clear by tapping in understood or clear or something in the comment section. If you have any doubts, obviously let me know that as well, and I'll check it out and answer you. Hi Philippe, good morning to you. I'll wait for a few moments because the audio is sometimes a little bit delayed and sometimes it may take time for you guys to write or type in. Okay, thank you Philippe for the confirmation, and Clever and Norm for the confirmation over here. And let's move ahead with the next chart. Next chart is of EURCAD, which was last time when we checked had touched our second target. So from there on, it seems to have gone up. So let me just make a few things very clear on EURCAD. 1 second. Okay, so on EURCAD, when we discussed the chart last time, the market was somewhere around here, right? So basically what is happening here is, let me first discuss the count here. There are two possibilities which are possible here. The number one possibility is that this is a small pullback, and once this small pullback is over, this market will go higher, right? However, the primary possibility which we have been tracking for a long time was that WXYXZ, or the second possibility is impulse. So the main possibility that we have been tracking for quite some time is that we are inside a corrective structure here, and the corrective structure looks something like this, right? So in that sense, this wave Y is sort of complete here. Now, if we go along with this ideology that the wave Y is complete here, then it comes out that the next structure can either be the X down followed by a new up leg, or it could be that if the wave Y is complete here, the correction is over and this market will see new downside, right? So if that was the case, that this market was going to see new downside, then the movement here should have been more bullish. Currently, the price action is sideways and choppy. So my understanding is that EURCAD is a counter, may head in the higher direction or upside, basically. So what our analysis was that let me just put the counts back in. So what our analysis was that once this green channel is broken, by the way, this was again discussed in live market around this time, around 28th December, or whenever the webinar was near 20th December. So our analysis was that if this market breaks below this green channel, we will look for shorts. This was proposed as our target 1. This was proposed as our target 2. Now what happened is it did achieve our target one, and then it gave another pullback. So in the next webinar which we were doing around here, right, somewhere here, we again discussed that if this market is going further lower than basically if it goes lower than near the recent lows, then it will achieve the target too, right? So a short setup was again discussed. It again went down and achieved our targets, right? So basically this market has given us two trades so far, right? And both of them we discussed in live market and we discussed beforehand. Now getting on to the actual price. So by the way, I'm pointing this out because some people are joining in new. They may not have been following the webinars every single time, so they may not know that we are doing these kind of trades and taking them in live market, right? And this also points out the reason why I keep saying to you guys that attend the webinars live. Do not use them as a recording, but attend them while they are happening. So getting back to the actual discussion now, so the minimums have been achieved, right? And so if we go on further with the count, this WXYXZ count which we were discussing, let me first change the degree of the same, right? So it looks like we may have the X here, right? That's the first thing we need to keep in mind. If the X is complete here, then we will see new upside, but I don't think there is any point in taking new longs until we see at least a move higher than 1.453, which is basically near the last high, right? Why am I saying that? Because even though it looks like a correction which has completed here from this point, it looks like it has completed something here, but in fact it could still be a movement heading in the downward direction. For instance, I can also count the same structure as a leading diagonal to the downside, right? Because this is the wave 1 of the diagonal, 2 of the diagonal, 3, 4 and 5, right? And once this diagonal is complete, this could be considered as a pullback. I mean, actually, let me remove everything and just tell you guys straightforward. What I think is that it may be a wave 1 down followed by a 2 up, or let's say an A down as a diagonal and a B up, which can again see more downside. So again, we do not have confirmation for that. So I'm not proposing any kind of shorts here for the time being. But as such, it is possible. Therefore, we wait for bullish opportunities to the upside near the last highs. My alert is placed at 1.4537, and for bearish opportunities, let's just say if it goes near the last lows. So it's a wait and watch market, and my personal bias at this point is that it might go bullish, but as I said, no trades for now. So that was my take on EURCAD. If you guys have any doubts in this discussion, you can just let me know in the comment section. Otherwise, please type in clear, confirmed or something. And the next chart, we'll be moving on to USDJPY. Hello, and would you mind checking CAD JPY? Sorry, I'm not tracking that pair and we are not taking requests. We follow a fixed number of instruments here. So what about you? Okay, clever. Thank you for the confirmation there. What about Philippe, Norm, and Madhavji and others? Hello, Steve. Thank you for the confirmation. So USDJPY, let's head over to our next chart. So USDJPY, let me just discuss the scenario or the picture. Let me just have a quick look at Euro as well. So it's looking like going upside. Yeah. So USDJPY, when we discussed last time, I suggested that two things are possible. Number one is that the wave Z is already complete here and that this market will head higher. However, it was also possible that the Z is not complete here and will have one more leg down remaining. Now, let me show you from the point of reference. So this is our last point of reference. And from this point on, let me just remove all the other data. Okay, so from this point on, we are tracking a sort of a zigzag correction here, right? So the first count that we have is that we have taken the wave A here, the B here, and the C here. So a zigzag correction basically consists of three waves: a wave A down, In the downward direction, it will have a wave down, which is called an A wave, a B up, and then a C down. So in that sense, you can see that the A down is complete, the B up is complete, and the C up down is complete. So if that was the case, then Z is considered complete and it will show some bullishness, right? So that count is still valid, but we do not have confirmation for the upside here. So what basically by confirmation I mean is that it should take out a significant resistance level. If you are going to talk in price action terminologies, in Elliott Wave terminologies, it could also be a trend line, it could also be some other important pivot. But to make things simple, we are using this level of 137.362, which is basically the point where the last wave X was, right? Roughly speaking. So it has not taken that out. If it does do that, then we will have sort of a confirmation that the Z is complete. And if that happens, then it will open to much higher levels to the upside, right? So it has done nothing of that sort. So that basically means we are still in the unknown. And what the unknown is, the unknown basically means that it is possible that the wave B is here and this is heading down for the wave C, right? So the unknown basically here is the probability that one leg down is still remaining, right? And in this particular case, because it is already in a range bound market, it is easier to accept this target, like not target, accept this count. So what I'm basically saying is that the downside count is quite legitimate at this point. We cannot completely relegate it, right? It is possible, and it is possible that we do see some further downside here on this counter. And if that happens, we already have the proposed targets for this. Let's have a quick look at that. So our first target, if this count plays out in the downward direction, would be 129.072. And in the extreme case, we are looking for 126.918. So this is what we expect. So the playing strategy for me right now is that around the wave A low, I have placed my alert. So this by the way, although is an alert, and generally what I do is I check the price action again when a alert is triggered. But in this particular trade or case, this will, in my understanding, serve me as a trade alert. So once it's fired, I'll probably just take some positions to the downside. So USDJPY, that's my take here. And if we are looking for the bullish counterpart, EURJPY seems to be doing that, which will be the next chart which we'll be discussing. And if you have any doubts on this chart, let me know in the comment section, or if you have understood it, whatever we discussed so far, please type in clear or understood or something before we move on to the next counter, EURJPY. Thank you, Jill, for the confirmation. So in that case, let's head over to our next chart, EURJPY, which is looking very bullish here, right? So last time when we discussed this chart, our view was this. Let me show you what we were discussing. Yeah. So our view was that a possible downward movement was in play, and we were thinking that maybe this is the wave one, maybe this is following as a wave two, and it will be followed down by a wave three, right? But however, the bullish movement in this counter is extreme. It has gone a bit too much up. See, in practice and theory, it could still be considered as a wave two continuation. However, I don't think that we should consider that as our main possibility, right? So what's going on over here is, let me just run some alternate scenarios in front of you guys. So first of all, we can think of it as like this, that this was, one second, one up, two down, and then we have continuation for three down, right? Or we have C down. So let me just quickly do one thing here is, A, one up for two and down for three and up for four. It does look like it is forming a possible diagonal. This is a possibility I have not discussed previously with you guys. So I'll have to run a separate chart for it. Okay, so let me just show what I'm actually discussing here. So I'm going to discuss this chart from a little bit higher time frame perspective. We are currently on the 1 hour chart, and if we look at it from this point of reference, around the price of 148.395, which is also the last known highs, then we see that this pattern can be considered as a possible diagonal structure. Diagonal structure, if you guys are not familiar with in Elliott Wave terminology, is a 5-wave pattern. With the first leg down is considered a wave 1, correction to the upside as 2. Another leg down in 3 waves is called a wave 3, then a wave 4, and then a leg down is again called a wave 5. However, the important feature is that the 4 and 1 overlap. So this is the price action of 1, and this is the price action of 4, and if you can see, they are very clearly overlapping. So this overlap is what makes this pattern labeled as a diagonal, right? So now that we have a diagonal, generally we will wait at least till 50-60% retracement, right? So this is the point which I have overlooked because we were considering bearish possibilities. But now that we have that in mind, so we realize that 50-60 is again still not even touched. 50 will be where my trigger is, and 60 will be at 144.208. So in short, this market can now very clearly, so basically this becomes a short-term long setup here. My alert is still to be triggered, but short-term wise, we can look for some long opportunities, which should take this market from 142.87 to 144.17, roughly speaking. So this is the price range where this market can easily go now, right? So another thing, if we are looking for short-term bullish setups and discount, I will update before our next conversation. But short-term wise, what we need to focus is this price action, right? This is the important price action. And before we discuss this, by the way, guys, do keep in mind we were able to capture this whole leg down because our setup was once this red channel is broken, we will look for shorts, and our target minimum was below wave 1 low. So it did go below that. So this is the minimum movement which we captured, which was actually quite big. Now getting back to the current discussion, because we think that it might be heading for the corrective leg higher, we expect it to be in 3 waves, right? And 3 waves in this case, A up, B down, and C up, and we are going to call them as a zigzag correction. So again, if you guys are not familiar with Elliott Wave terminologies, I'll just quickly point out that what we are seeing from this point of reference is first leg up is called an A, then a leg in the direction inverse to the main trend is called the B, and then a leg again in the main direction is called the C. So here, which we have is the exact pattern. So what we do generally in these kind of scenarios is we run parallel channels here. So we make a trend line from the starting point to the end of wave B, which is this point, and then we'll create a parallel of it from the A, right? So that's exactly what I have done over here. If you check out with this orange trend line, starting from the starting point of the structure to the low of B, and then the parallel goes to the high of A. So as you can see, what we really do use this trend line for is it can serve two purposes. One, it can give us targets for the upside. Don't really need that. We already have targets. Our targets are anywhere between 142.88 to 144.110. In my general understanding, these targets do tend to hold pretty well in cases of diagonals. So around 144.17, we can take as our target too and book partials, right? Second thing, what this trend line is telling us is that it should not be breached to the downside. Once it's breached to the downside, like this one, we will have a sell setup, right? Not every time it works out, because sometimes if the analysis is incorrect, the trend line will be incorrect and hence the setup will be incorrect. But in this case, the likelihood possibility of that happening is a little bit on the lower side. So anytime this market, what you call, goes down below this trend line, then we can pretty much consider that our possible upside is likely complete. So what I'm going to do is I'm going to place some alerts over here on the trend line exiting channel, right? So, and we have already discussed the upside targets. Hopefully that does not sound very confusing. I do have to remove all this clutter from the screen. Let me know, guys, if you were able to follow along with this discussion which we did, the quick discussion on EURJPY, the diagonal, and the short-term upside movement, which may later on be followed by downside in case our analysis is holding correct. Thank you, Jill, for the confirmation over there. What about other guys? Thank you, Steve. Thank you, Anna, for the confirmation. Okay, so in that case, we can now move ahead with our next analysis. Let me just check a few more things. This becomes useless, right? What is this box? Okay, some other. All right, so that was it for our discussion on EURCAD. This is, by the way, the updated count. We did not have to wait for the next webinar for that. I just quickly updated it over here itself. Thank you, Clever, for the confirmation, and Norm and Philippe. Let's move ahead with our next chart, which will be CL, crude oil. So here on screen, basically, it has not given us much to, what do you call, discuss if you had followed my last analysis. Pretty much following things as we first discussed it, or discussed it last time, basically. Let me just go over it very quickly anyways, because I understand not everybody is attending the webinars regularly. And before I go ahead with it, let me just quickly point out, as required, I believe, the opportunities which you may have missed if you are not following. So first of all, we were able to capture part of this long and some part of this long as well, and some part of this short as well, right? These were all discussed in live webinars. You can check the recordings when the markets were near these levels and see for yourselves how much part we were able to capture, what was the setup and everything. And anyways, now going to the actual analysis at this point in time, what we have is, from this point, I am considering this as a possible flat structure. And last time, as I discussed, we were expecting this to be the C wave complete. Now, there is a possibility that the C is actually not complete here. And we do not think of that as a very high probability scenario, right? The primary bias is that C is complete here, which would mean that new low is to be formed, which would mean that we need a sell setup, and which has led me to put an alert at 71.71, right? So another possibility is that the C is still continuing, but we don't really care for it because it's low probability. So we have placed an alert near the last high, but as I said, it's just for the sake of doing it. That's just the process, right? So now the current development suggests that this is a corrective price action, basically a WXY correction, right? I did not care to check it much or check it in detail, but basically what is it telling us is that if this is the correct count, that if the wave C is complete here, right, and if the wave C is complete, then that would mean that this new leg down is possibly a wave 1, right? If that is the case, then this could be the wave 2. And if that's the case, then this structure, which I just mentioned, is a possible WXY. We can just draw the trend lines for it. W up, X down, Y up. Actually, it can be counted 2-3 ways, but let me just draw the trend lines roughly. We don't really care to be precise here, right? So the aggressive setup would be to take shots at the break of the trend line. I'm currently not interested in that. A little bit more conservative approach will be to wait for the break of wave 1 low, right? That sounds much more doable, although that will also increase our stop losses by this much. That is to say, if the market reverses from here, like just falls, then taking entry over here and stop loss over here increases our risk. And if we take the aggressive approach, that is take the entry over here, then the stop loss is only this much. So the general rule of thumb, or the general thing which you should do, or which I do, is that if I'm feeling really serious that this market is really going to go and give a strong fall, then I'll take entry 1 or partial entries over here and entry 2 partial entries over here, right? The stop loss remains the same. And obviously, when the market moves in our direction, we start to trail it. But that's how you generally should take trades, not like entering the whole position at the same time and then trying to exit at the same time. By the way, this goes the other way around as well. If the market is not moving in your direction, you also want to take the positions out little by little instead of taking the whole thing out. But then again, that also depends on the analysis which you are running. So that was our take on WTI crude. I hope that this was clear enough, and I think it's rather simple. But anyways, guys, let me know in the comment section if you have any doubts, and if not, if you are clear on what we were discussing, then do type in understood or clear in the comment section. I'll take a few seconds here and see if you have any doubts or if there are any comments here. Hey, thank you for the confirmation there, Jill, Norm, and Clever. Let's head over to now gold XAUUSD, which is moving as expected. Okay, so this is the chart of gold, and if you guys did pay attention to the thumbnail I used in the webinar, this is the exact image which I placed in the webinar. Where is it? 1 second, let me just show you. Okay, so this is the image which I pushed in the webinar, right? After all the logo and everything, this was the wave 3. This was the expected reversal for wave 4, right? And this was the wave 5 up. I did it in live market 3-4 hours ago. And I mean, you can check when I pushed the update. It was here. Let me see what the price was. It was at 1884. Sorry about that. It was at 1884 when we pushed the thumbnail and everything. Now you can see that it has literally gone down as per the arrow, and it is precisely going down, right? So again, I cannot cover every single movement in these webinars because these webinars are conducted only 3 times in the week. So some things will happen which I have seen and I posted in my private Slack group, or I have traded myself, but we could not cover, right? And yeah, by the way, guys, if you are curious, the private Slack group is only accessible to people who are in my training program, and the training program is only available for people who have completed my video course, right? I only work with select few people because my time is limited and I only want to work with people who are real serious. Now, sorry about the whole diversion there. Now heading back to our discussion on gold. So what is really going on over here is two things are possible. First of all, I was expecting a reversal, that's for sure. But as you can see with the arrow, I was expecting it only till around the level of 1877, this red line, right? Maybe a little bit lower is fine. This is also possible that it still is a wave 4. But the strength looks a little bit strong, so I'll discuss the counter scenario as well. So first of all, Let me give you a quick rundown of the bigger picture view over here. So in this counter, what we are expecting is that from this point of reference, which is around the level of 1615, we have the wave 1 up, right? And wave, sorry, what? This is the wave 1 of a diagonal. So we have a wave 1 up here and a wave 2 down, and we are expecting that there will be a wave 3, possible correction for 4, and then up for 5. So within this wave 3, I have identified the internals, which is what we labeled in this chart, right? So let's just quickly go and zoom in and check the internals. So what we have labeled over here is we have the wave 1 up, the Roman 1, the wave 2 down, and we are heading on for the wave 3 is what we counted, right? So the expectation was that once this market is completed the fourth wave as a possible flat, A down, B up, and C down, then we will see the market heading higher. That was our first take on it, right? Now let's have a look at some counter views. The other view is, by the way, guys, this count is still valid. So if this setup plays out, we will basically be looking to add longs near the last high, let's say around 1882 something. So it is still a valid count. How to play it? Once this alert is triggered, I'll look for longs, right? That's my way of taking trades here. Now, because we wanted to discuss some counter scenarios, let's quickly check that. The first counter scenario will be that this wave 4 is over here. It's already complete. And this is the wave 5th. It's complete, by the way, as a possible triangle here. Right? And if the 5th is complete here, this will be the 3 here. Right? In that case, the 4th should be playing out here, or it could go sideways from here, and then the 5th will follow through. Right? But the interesting thing is that because it's wave 3, right, it should not. Oh, actually, one second. Yeah, it's a wave 3. So in this picture, because it's a wave 3, we expect it to be much more strong. So I do not want to see it going inside the price territory of wave 1. So anytime this market enters this level, there is something wrong with this count, and possible bearish setups might become visible. That is basically what I'm saying, is that if the market really goes and takes out the low of 1864, then what is possibly happening is that we need to update the whole count, and it is possible some bearish scenarios might come into play. Until that does not happen, our count is being followed pretty well, so we will not update anything. I'll place things back where they were with the arrow and everything. And as I just discussed, the bullish count still holds, and will play it as is. I think it's rather pretty self-explanatory over here. Still, if you guys have any doubts here on this counter, let me know. And by the way, we have already discussed the upside targets for this. The nearest one, or the minimum one to the upside, was 1925, and there were much higher targets which I'm not much interested in right now. So that's our take on gold. If the wave 4 settles here, we can draw the trend lines later on. Right now we do not have a distinction for it, and it is too strong for a wave 4 also. Just keep that in mind. Although our trade setup, by the way, if we note, is not affected by it, because if it really does take out this high, it has already shown strength. So guys, let's move over to the next chart, and yeah, please let me know in the comment section if you have understood whatever we discussed here. Thank you, Madhavji, for the confirmation. What about you, Clear, Norm, Jill, Philippe, Anna, Steve? Are you guys still with us? If you are, were you able to understand our understanding of gold? Thank you, Philippe. So let's head over to S&P's 500. Some important news events incoming, specifically tomorrow. So last time when we discussed this chart, our take was that this could be a zigzag in the upper direction. That is a wave A up, B down, and then a C up, right? But for that to follow through, one second. So for this market to follow through with our, is there a question? One second, guys. I wonder if wave already reached. Yeah, that's what I'm thinking. But we need to wait for this alert, right? As we discussed, because if F5 is already complete, then we will know it when it goes below what is this 1863, right? So let's focus on the upcoming chart here for the time being. So yeah, guys, heading back to our discussion on S&P's 500. Last time, as we discussed, the market was heading higher, and I think it was somewhere over here. And I discussed that I still believe that possibility of downside is here. And by possibility of downside, I basically mean this. Right. So this is basically what I meant by possibility of downside, right? A down, B up as a correction, and then C down. So with that in mind, we had the alerts placed here. The alert was around 38, 34. So now it has not triggered. That basically means the market is not really moving in our direction. Now it's time for us to check what is really happening here. So first of all, a few things we can check is, first of all, this is the A down here, right? And we expect the market generally will reverse around 50-60 or before that. If it reverses before 50-60 retracement box, then generally that shows weakness is good. That is, the counter is specifically weak, right? So I'll just quickly mark that over here and remove everything else. Now currently what is happening is, if we consider this as to be the wave A, and we consider that the wave B is still continuing because it is most likely going to take out the last high, right? So the possibility of this reversing is still existent. We still cannot relegate it. And how is it existent? It is existence in the sense that if the market goes only till this level of 4,000, roughly speaking 4,000 to 4,005 something, till this level, if the market goes and then reverses, that is, let's say it forms a possible diagonal here, right? Let's say it goes like something like this: 1 up, 2 down, 3 up, 4 down, and then 5 up, right? That could be considered as the completion of wave B at the end, right? And that could result in possible sell-off. Do we have the confirmation for it? We do not have anything of that sort. So what do we do with something like this? What we do is we just wait and watch over here, right? So things to note here is, we need to note the behavior of this price within the range of 3960 to 4005, right? If the behavior becomes weaker and weaker, the market looks to be forming a possible reversal, then we will say that our count is doing well. That is, this count is the one this market might be following, right? However, at the same time, if this market takes out this level of 4000 plus with an extremely strong green candle, let's say something like this, then we will have to consider that possibly our count is not going to play out, and at that point we will change our hypothesis and we will look to play the market accordingly, right? So that's our take here. Still, bearishness is possible. I have discussed the important zone and important level, and how we will be looking, or where we will be looking for possible reversals, the zone around 4000 level. Pretty clear in that regard. I think not much to discuss on S&P. If you guys have any doubts on this counter, please let me know in the comment section. The next chart will be moving on to Nifty, followed by BTC. And also one important thing, guys, if you are liking this content, I will request that you hit the like button on YouTube or wherever you are viewing it. And also make sure that once the webinar is complete, you share it with at least 3 of your circles or colleagues. For instance, if you have some trading group on Slack or WhatsApp or Telegram or whatever you use, then please share it with those traders, because more participation is definitely required in running these webinars. It takes me a lot of time to come up with the content which I speak. For instance, even on the S&P chart, you can see I have 3 charts of S&P itself. This is the E-mini futures, the S&P, and the S&P CFD contracts, by the way. So it takes a lot of time. I do a lot of analysis, and what I present to you is only 10-15 minutes, it does take a lot of time to come to these 10-15 minutes conclusions. So your sharing my content is extremely important. So with that message out of the way, thank you for the confirmation, Philippe and Jill. Let's head over to the chart of Nifty, which will be followed by BTC. So let me just quickly open that up, see where that is. Okay, so here we are with the chart of Nifty on screen here, and it is sort of doing what we had discussed so far, but it has not completed the movement to the downside. So first of all, when we look at it, as we discussed in the last webinar itself, this was our point of reference around the level of 18,884, right? And our discussion suggested that there were two counts, by the way, but we are following this one for now because this looks to be the more likely possibility. We seem to be having the impression that the wave X was either complete or it was continuing down, continuing sideways, sorry, for a possible triangle. Now, if we consider this as a possible triangle, this will be the wave A of the triangle, the B of the triangle, the C, the D, and E, either complete or still has some upside remaining. So if this really is the count, then the setup is the break of wave B would confirm that the pattern is complete, and from there the market will fall. So the break of wave B means the break of the level of 17,792.55, 17,792 basically. So below 17,792, it will open the market up to much lower levels. I have some immediate targets pointed out here, I believe. So immediate targets were at at 17,730, and the next one is at 17,620. So these are the two immediate targets I have on this counter. Bearishness is still visible, and the counter is still open for a fall here, right? So I'm not going to change my view here on this one. It does seem to be the case where it is doing its own thing, just like when it was going up when other world markets were following downside direction. So yeah, unless we see some change of nature in this case would be a move higher than the wave C high, which is around 18,137 something. So unless we see something of that sort, it is open for more downside. Right. That was my take on Nifty's 50, and last chart we'll be discussing of BTC. If you have any doubts here, let me know in the comment section. Otherwise, just type in clear, and we'll move on to our last chart here. Thank you, Nkosi, for the confirmation. And what about the other guys? Are you guys still waiting for BTC, or you're already done with the main content? I'm not even sure how much of my audience actually follows it. Thank you, Philippe. Thank you, Jill. So let's quickly head over to our last chart. There it is, Bitcoin. So as I said, and I have said for way too many webinars already, Bitcoin is still open for further downside here. Right. However, this break of this CN trend line was a bit of a noteworthy event. It could still be that this market is continuing for the wave B. Right. So what's really to update here is, let me just get rid of all this. It is following a possible sideways movement, right? And by sideways movement, I think it might be following a sort of a triangle structure here. So what I basically think we will see here is a pullback here in the other direction. Let's see the extent of this pullback, and from which point does this pullback will start to suggest us that there is something else which is happening here. So personally, I think this pullback can take this market to 20,273 to 21,256, right? So until this level, this market can still remain sideways. Structure which should be on chart is this. And internal counts will look like a triangle, so we can label it as an A up, B down, C up, D down, and E up. So this is our expected progression on Bitcoin or the updated short-term count. Things will become a little bit interesting, or what do you call, possible change in nature if the market really goes higher than 21,444, right? It could suggest more, or not more bullishness, but a possible strong up leg. So we don't really want to see this market go higher than 21,444 in case it is still following our bearish count, that is A down, B up, and C down. So BTC, although is still open for downside, I basically mean that it can straight out fall down and will not be something new or anything new at all, because it has been open for downside for quite some time now. But with this updated count in mind, we now know that if the market continues sideways movements, what is the structure we are following, and how it will look like on the actual chart. So that was my quick take on Bitcoin here. Let me just quickly point out the standard scenarios. One is possible straight down, another one is down after the completion of triangle. And if we are wrong, we'll know it once we see higher. We will consider it once we see higher movement than 2145490. So that was my take on BTC. Updated short-term view here. Let me know if you guys were able to understand it. If yes, then please do type in clear. And also this will be our last chart. So again, I'll request you guys who joined in late or are watching this recording, that do hit the like button, subscribe if you aren't already, and make sure to share it with your fellow traders in your trading groups, or personally if you know people who might benefit from it. So that was it for our 24th webinar. Next one will be on Friday, and do keep in mind these webinars are conducted Monday, Wednesday, and Friday at 2 p.m. GMT. So make sure you join in live so that you do not miss on the next best trading opportunity. Thank you guys for joining in, and I'll see you next time.